Hi, everybody. Thank you so much for registering for my webinar with Jeff from American National. Today, we'll be exploring different indices and really seeing how we could capitalize your clients' um, different retirement strategies with American National. They have some great allocation strategies, really great products, and Jeff has something really great lined up for us. So before I jump into everything, I'll just wait a couple seconds here for a few more people to jump on. I see some people are still coming on here. Thanks again for taking the time, Jeff. I usually I'm a couple minutes behind, but today was just a few minutes before, so I think we're still waiting for some people to jump on here, it looks like.
Okay, cool.
Yeah, are you able to see my screen okay?
Oh yeah, I see it fine.
Okay, good. Alrighty, so I'll jump right into this. Again, thank you so much for attending our webinar. Just a little bit of housekeeping before we jump into everything. Really excited to have Jeff on. He had actually been up here in Omaha, Nebraska for one of our life and annuity academies they had hosted. He did a wonderful presentation. It was a great event. We've got one more coming up here in the next few weeks, but we were just super lucky, I think, to have Jeff. uh, for people that don't know or haven't gotten the opportunity to work with American National just yet, I believe they have some of the best just service times. Jeff has always been super responsive, has always been very attentive to everything we've needed. And when it's come to replacement business, they've always been a really, really big player for me anyway. Do a bunch of business with them. So really excited again to have them on here. And so, just for our newcomers, and as a reminder for those that have been with IAMS here for a while, we do have our new producer builders and different marketing programs that you get access to just by being appointed with IAMS, even just with one carrier like American National, for example. But when you are new to IAMS, you do have your new producer builder. You have 180 days from the time you first appoint with American National, for example, to get up to the $100,000 level, all the way up to the $1 million level. And in that, you see a bunch of different incentives. So at the $100,000 level, nice easy case right there. You could get an iPad, $750 cash. You could do mailers if you still do mailers in your area. I have a lot of different agents that utilize several different marketing options. And so mailers is one of them. I used to do mailers when I was out in the field. So it's really nice to have these different incentives, even at just such a small level of production. Now we do go all the way up to the $1 million level within your first 180 days. I have some agents meet that off of one case. I have some agents meet that um, off of a few ones. So it really just depends, but you do have, again, 180 days. And the other thing I will say is do not be limited by what you see on the screen, because a lot of times too, I'm talking to agents that have been doing this for a while. So they already have marketing programs that they're already using that makes sense to them. It works for them. So the other thing I will say is don't be limited by what you see here. If you have your receipts, if you have any statements, just send them over and we'll work with it. So that's a really nice incentive to have. Um, you do graduate from that after the 180 days, because now you're official with IAMS, and we do have our marketing reimbursement where we'll pay you $100 on your marketing reimbursement for every $100,000 of FIA premium you're doing. So as an example, American National has some great FIAs with bonus options, and also on the rate certainty. For example, they have a nice fixed bucket that you can actually select and set that for either 7 years or 10 years. Is that right, Jeff?
Uh, that is correct.
Yeah, yeah. So they have a lot of nice options with some variety. So it's actually pretty easy to make your marketing reimbursement balance. And then on the life side as well, we do $200 for every $100,000 of premium. And then on the life target, $200 for every $10,000 of life target premium. So it's pretty simple to build a marketing balance with us. It's just a matter of how much business you're doing with us. We also have our nice referred producer program where we give you $50 when you refer an agent to us and they appoint with any one of our 70 plus carriers that we're partnered with. And then we do pay you on overrides. Now, those overrides do not come from the business that they're writing necessarily. It actually comes as a thank you check signed by Steve and Charles, the owner and CEO of our company. Those are their favorite checks to write because just like for you guys, referrals are the lifeline of your business. In a different context, it's also the lifeline of ours. So we're really thankful to get the opportunity to help you. So we would love to also see who else we could help in your network. And so off of that, you do get a small override on your life target of like 15 basis points, 0.075 on single premium life, 10 basis points on MIGAs. On indexed annuities, you get 20 basis points. So these are paid out on a quarterly basis, so it's another way to generate income for your practice, whether you're putting that into marketing, whether you're putting that into lunches or dinners that you're spending on your clients that give you a bunch of business. Lots of different ways to utilize the money that you could be generating just by sending us referrals and building up a marketing balance with us just by doing business with IAMS. We do also have great back office support. Personally, I think we have the best in the business. So not only do we have great internals and close relationships with the carriers, but we also have great people that come into the office every single day. We have a very small handful, like I could count them on on my hand, on one hand, how many remote workers we have. But otherwise, most of us come into the office every single day, Monday through Friday, and we work very hard and diligently to get all of your stuff issued, paid. We work on case design. And then we also do have all of the forms available and accessible to you. We know that it takes a lot of time just to go into the carrier portal sometimes. So if you need us to go in there for you, we will. And I think that's what makes us top tier in our back office support. For the last nearly 40 years, that has been a huge value proposition for us. Back office support, we do have best in class in that, not just because of all of the software and tools that we use, but I think really just because of the people that we have here. So certainly feel free to utilize us if you are running low on time and just need forms, case design, any of that good stuff. We also have our IAMS website that is accessible to you 24/7. I know we come into the office and you might not always get access to us after hours, but after hours, you do have Annuity Rate Watch. You're still able to do your e-apps online, all in one portal. And then we do have our great sales resources library. I love that portion of the website also because we have fact finders in there if you're not already utilizing one. Sometimes a good fact finder can make all the difference. That's how I've been trained since day one. Be a really good fact finder, and the more information you get from the client, the better it is for you to be able to find a solution, but not only find a solution that fits them so that you're not just a person selling annuities or selling life insurance. You're actually doing comprehensive retirement planning. And so we have several different things in our sales resources library, not just fact finders, but we have just a different array of information from life insurance, long term care, annuities, basics, foundational information. So if you haven't checked that out yet on our IAMS portal, definitely do so. Every day I have agents that have been here for years and still don't use full access of the IAMS portal and everything it has. So if you have any questions on that, just give us a call and we're happy to guide you through it. We have our different e-app solutions that we use again all on our IAMS portal. This is all accessible, so you don't have to go directly on all of the carrier portal and use their stuff. You could just go straight onto our IAMS portal, and it's accessible through Luma Firelight. We also have great Luma Firelight staff here. When it comes to iPipeline, not super knowledgeable in that just because I'm one of the annuity sales directors here at IAMS. I think I forgot to mention that. But with iPipeline, you're also able to quote from that, do your e-applications when it comes to the life side. I believe there's only one MIGA carrier that does iPipeline, but Luma Firelight is the bulk of everything I do business with. American National is on there. They're actually even doing a cash incentive for your first two Firelight apps. And so certainly love Luma Firelight and all of the technology that comes along with this business because you're able to just help clients even remotely. Some agents live about 2 hours from their clients, and with Luma Firelight, we're able to collect signatures, do an application, all from the comfort of your home. Sometimes it's not even 2 hours, sometimes it's much further. I have some agents that are all virtual, so Luma Firelight and really knowing how to navigate this software that is a little bit newer to some agents that have been around for a while is a huge deal. So if you're not super comfortable with it, don't hesitate to reach out. We have great Firelight staff, and then you can also utilize us on the marketing side. We're happy to get you through that. We also have our creative services. Our creative services, that's our in-house creative department that we have here at IAMS, and we're really fortunate to, I think. Most people have to outsource that and go through third parties here. These are people that also come into the office, our two offices, Topeka, Kansas, and Omaha, Nebraska. So feel free to utilize us on that end. You could also use your marketing balance for any digital solutions, agency solutions, turnkey solutions. We have agents that do all sorts of things. So I highly encourage you to reach out to them for anything you might need pertaining to branding, just redoing your website, all that good stuff. These are some examples of some of the things that our creative services do. So, for example, if you do have marketing, but you don't necessarily know where to start and all of the ideas you might have, we actually do a complimentary marketing analysis. I see Gary Fleming is on my webinar right now. He had attended our Life and Annuity Academy, has some opportunity for American National, but also we found through doing a complementary marketing analysis that we have room to explore some of his branding, maybe some of his website design, and lots of different opportunities to help tap into the current and existing book that he has. So there's lots of different things that we could do just by doing a complementary marketing analysis. So feel free to reach out if you haven't done one yet. If it's been a while since we have done one, things are always changing. So just give us a call and we're happy to do one with you. Next, we do have our IAMS Wealth Management. Now, this department is right down the street from us, pretty much, and these are for our securities registered reps. Now, this department is designed to help you increase revenue, improved client retention, and really strengthen the relationships that you have. And so the financial advisors that we have in this office, I think, are truly the best because not only are they really good at what they do, they're also just some of the best people that you'll meet. They're very humble, but they're also very sharp. So I think that's the best combination of advisors to work for and with. And if you're also just getting started and really wanting to learn more about their IAMS Wealth Management Starter Program, they have a great program. Just reach out to us and we'll connect you to them. We do have some carrier incentive trips that we've got going on. So for example, Athene partnered with us on this incentive trip for Beachy Keen. This is actually about to be ending quite soon, but still feel free to reach out. We have agents again that meet some of those $1 million cases and qualify just with a few of them. So feel free to reach out there. That's a nice trip that we're doing on a beach resort with them. We've also got our SILAC incentive trip. You only need 2 million in paid through SILAC FIA business. So that's one of the smaller qualifications that we need, but really, really great event overall, and they'll take good care of you in this end just by doing business with SILAC. And then next we do have our Life Annuity Academy, which I brushed on really quickly at the beginning there. So this is an all-in-person live training event that we do. It's all expenses paid, just a $500 registration fee, and you get access to much more in person. Now that $500 registration fee that is reimbursed to you once you do at least $250,000 of annuity premium and life equivalent. So feel free to reach out to one of us if this is something that you're looking to do. We've got one more for the year. Um, but we only have, I think, 3 spots left. So certainly just give me a call at 800-255-5055 if you would like to participate. And so that would be it for now. We do have our social media that you can tap into. That way, if we are not talking, you can still stay up to date with what we're doing here at IAMS. And so before I turn this over, I just have a quick poll to launch. So one, would you like more information on our marketing reimbursement? Alrighty, thank you so much for taking the time to vote. This helps us in knowing how we can service you as our agents. Alrighty, and then without further ado, I will go ahead and turn this over to Jeff. Yeah, I am super excited to hear this presentation because I haven't heard it just yet. But there's so many different options for allocations with American National. So if you are on this, and then if you're also just listening to the recording, American National is a really big player in the FIA space, and they have a nice variety of different options. There you go.
Okay, good.
Yeah, you don't
All
want to
right.
give us all your secrets.
All right. Well, good morning, everyone. Thanks for tuning in. This is Jeff Moore with American National. Hopefully got a good show for you. I think it's going to be very insightful. Not really going to talk specifics on products. We're going to do just really a deep dive on the indices. So many companies out there in the FIA space, and we're guilty of it. We tout product, 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 but really what it comes down to is how the various indices and strategies, they're what really make the products. They're what make the difference. So, and a lot of us, the more we know about it, the better we can tell the story when we're in front of our clients. So we'll start with the basics. I think everybody's heard of the S&P 500. It's been around for quite some time, since 1957, believe it or not. That's when Standard & Poor's bought at that time, it was called the stock market composite. They bought it from the predecessor that created it back in the 1900s, early 1900s, 1911 to be specific. So a lot of history for you there. But at that time, it was a 100 stock index. Standard & Poor's purchased it in 1957. They put 500 all U.S. domiciled companies in the index. Obviously, we don't have the same original 500 that we had then, but it's rebalanced occasionally. They add companies, they take out companies. But 80% of the total U.S. market capitalization, that means 80% of the U.S. stock market is represented in the S&P 500. It's one of the most diversified indexes out there, covers 11 different indices. And noted there at the bottom, I said it makes up 80% of the total market capitalization. Kind of to note, the top 10 tech giants, technology companies, actually make up about 40% of the S&P 500 because, again, it is a stock market capitalization weighted index. Now, there's other indices out there that work off of the S&P, but the basic S&P, it's a market cap weighted. It's a big indice, even though large weighting in technology. 11 industries are represented, and no one industry represents more than a 30% weighting. Now, since inception, the S&P 500 has been positive about 74% of the time. So that's going back to 1957, positive 74% of the time. So by many people, by many institutions, it's regarded as the best single gauge of large cap US equities. Performance-wise, 1-year performance, 8.6%. 5-year annualized, 15.5%. 10 years, 12.5%. 20 years, still double digits at 10.9. Now let's look at another big index, not quite as big and not quite as long of a history, but it goes back a little over 30 years, actually about 40 years to be exact, and that would be the NASDAQ 100 index. Now here you've got 100 of the largest domestic and international, but non-financial companies. So you're not going to see real estate investment trusts, banks, and the like. These are mostly technology, biotech, consumer discretionary services, communication services. We're talking the Microsofts, the Amazons, the Googles, the Metas, you know the companies. Now, since it's been out 1985, it's been positive 13.9, or it's had an annualized return, excuse me, annualized return of 13.97%. Pretty impressive. Returns annually over the last 1 year, over 13%. 3-year annualized return, over 16%. Oops. 5-year return, nearly 17.5%. 10 years, again, 17 plus. Even 20 years out, 14% plus. So it does slightly edge out the S&P in terms of annualized performance. It's much more of a growth-oriented, much more of a concentrated bet in the market. But not many companies, that said, not many companies offer you direct exposure to the NASDAQ 100. They've got a lot of, and we've got a new one as well, indices that utilize the NASDAQ 100, but they don't utilize it solely. So we actually have a product, 2 products, in fact, 2 FIAs that give you direct indexing exposure to the NASDAQ 100. Now we've got the Patriot Technology Index. Now this is a proprietary index to Anaco, and it's only available on one of our FIAs, and that's on the Anaco Strategy 10. Now this is a really unique story. They being BNP Paribas Bank, they developed this for us back in the summer of 2024. So it's brand spanking new. It's had 1 year. In fact, its first full year, it did a little over 8% in actual performance. So not too bad when you figure the 1 year performance on the S&P was about 8% plus. So not bad for a vol control index. And that's what it is. It's a rules-based approach, investing in both technology and growth, but with protection. Now, as far as the protection goes, it offers exposure to a select group of companies within the Department of Defense's critical technology list. And I'm going to show you what that list looks like. Now, it utilizes a proprietary geostrategic weighting to minimize risk and adverse foreign influence. Plus, on top of that, uses a traditional vol control, basically maxing out at a 7% vol factor. So if volatility within the index exceeds 7%, it will utilize cash and bonds to balance out and smooth that performance and that volatility. It's a very simple strategy. It's an uncapped 130% participation rate. Now, yeah, they can vary, but when it was released, it was 120%. And here we are a year later, and it's only moved, and it moved up about 10%. So it's not not going to move around a lot month to month. It's pretty steady Eddie. There's no spread, there's no fee, no cost of any kind. Now, I'd like to kind of focus on the heart of this index, kind of give you a little bit better picture where those companies are selected from, that critical technology list, and really what is that geostrategic weighting? Okay, we'll start with the products, the stock selection. Again, the U.S. Department of Defense has what it considers a critical technologies list of industries that are very, very important to the safety and security of the U.S. There's 14 technologies utilized here. We're talking about areas in the emerging opportunity area, advanced materials, biotech, quantum science, and the like. Then we've got defense specific. There we're talking about hypersonics, cyber, and directed energy. And then last but not least, we've got emerging adoption areas. And there you, of course, everybody's talking about AI today. You'll find a slew of AI industries within there as well. Space technology, advanced computing, renewable energy. So again, and they're mostly mid-cap, large-cap companies, mostly US based. They are going to be selected as long as they're in one of these 14 industries. That'll be the first stage or first phase of selection for companies in this index. Step two is how much foreign influence do they have? And there's basically 10 geostrategic risk weighting components that they look at. There's governance. Where's the company located? Where are the board members located? How much foreign ownership, even if it's U.S. Located, how much foreign ownership and influence is there? Operational, where's the customer base? Where's their asset base geographically? Where are their suppliers located? You look at companies like Apple, they've got a lot of suppliers outside of the U.S. Commercial, where's the revenue coming from? Do they have any joint ventures? Where are they located? So you kind of get the picture. They're looking at basically 10. When I say they, it's a G.H. Whitney, which is a consulting firm, which is basically working in tandem with BNP Paribas when they built this index. They have this geostrategic risk weighting formula that they have created. It's proprietary to them, and hence now it's proprietary to us in this product. And basically, a company has to have minimal exposure, and the less exposure they have, and I'm not saying they can't have geostrategic exposure, it just can't be in bad players. There's countries right now, and I'm sure we can think of a few of them, China and Russia would be a couple, where they're probably not the best players geographically speaking. So if they have too high influence or concentration in some of those countries, their risk rating score will be lower. Well, we want a higher score. So they have to score 2.3% or higher. Now, J.H. Whitney does this scoring every month when they're doing the stock selection within this index. So it can change month to month. Companies that you might expect would be in there may not be in there. Apple, I mentioned a few minutes ago, they're not in the index because they actually have too much of a concentration in some of those less than amicable countries that we work with. Now, performance-wise, like most volatility control indexes, this one is going to work better in very volatile markets. And I circle a few there just for you to take a look at. 2019 through 2021 was a pretty choppy time. And it actually did pretty well relative to the basic indexes like the S&P 500. Now we've got a very good client approved video. And this is something kind of new for Anaco. We used to, if you looked about 5 years ago, we had no client videos whatsoever. Now we're awash in client videos. So if you want to play a client facing presentation on this index, you can go to their website. Now, where do you find the website to pull up this video? Well, you go out to products and services on the website. The website's up there at the top, the URL, basically lad.americannational.com. You click on products and services. You click on the one and only product that has this index, the strategy index 10, and on the web page for the product, you'll see the index homepage for the BNPP, Patriot Technology Index. So it's a great story, but not just a story, it's got performance to back it up. Now let's go to the next one. Not proprietary, but equally impressive and being widely used now in the industry. There's probably better than half a dozen large annuity companies out there that utilize the S&P 500 dynamic intraday TCA index. So not just ours, there's several companies utilizing it, probably about $5.8 trillion, not billion, trillion, 5.8 trillion in funds within the insurance industry deployed into this index. So it's becoming a large player in the FIA space. Now, what is the S&P Dynamic Intraday TCA? Well, first of all, it's an index designed to measure the exposure to only one underlying index, the one and only S&P 500. But unlike most S&P 500 indexes, it doesn't just sit there and mimic or passively try to participate in the gains of the S&P. It actively follows trend signals throughout the day to change the weighting to the S&P 500. So it sets a fairly high volatility target of 15%, and then it rebalances up to 13 times a day. So it has 13 intraday trading windows. And if volatility exceeds that cap at 15%, it can and will allocate to cash, as it did earlier this year from about mid-January, just after the inauguration, through mid-April, when we had a lot of volatility in the marketplace. It went to about 60% weighting to the S&P and a 40% weighting to cash. But the key takeaways here are, unlike a lot of these newer and vol control strategies and indexes, this one is based on really one underlying benchmark index that everybody is familiar with, the S&P 500. It's not utilizing futures or bonds or other major asset classes other than cash. It's anchored to an established index, the S&P. So by the numbers, you've got a pure S&P 500 vol control index. The only other thing it will utilize to dampen volatility is cash. So it keeps it very simple. Now, over the last 12 months, the average exposure to the S&P has been about 125%. It's probably a little bit lower than that if we take into consideration earlier this year, but over the last 12 rolling months, it's been about 125%. But the last statistic is really noteworthy. Even though the S&P 500, as I told you a little while ago, since its inception, it's been positive 74% of the time, that's not the case on a year-over-year basis. So if we look at the TCA index, or on a year-over-year basis, it's positive 75% of the time, versus the S&P 70% of the time. So here you've got a volatility control index that when times are good, it can lever up or weight up to 250% of the S&P and take advantage of that positive ride. But if times are bad, it can weight under 100%. It could go to zero. I don't think it's ever been that low, but it can go less than 100%. And by doing that, that active management gives you, by the numbers, pretty impressive performance. So here's kind of a schematic of how the index works. Again, it tracks volatility and momentum, and it looks at 13 intraday windows where it can change the weighting to the S&P. Now, it's only going to rebalance when a trend is detected. So it doesn't mean it's always going to trade and change the weighting multiple times, but it can. Now, it has a floor and a cap in rebalancing. We know the floor is zero, obviously, but the cap in rebalancing is if volatility exceeds 15%, it's definitely going to rebalance. Now, performance-wise, on a rolling 3-year basis, I think it's kind of key. We talked about performance in terms of returns. Let's talk about rolling 3-year volatility versus the S&P. This is a kind of a neat statistic, and I'm a numbers guy, so I dig into this stuff. The S&P 500, the typical volatility, and this is obviously looking back over a time period, but over 3 years, the last 3 years, it's averaged about 18%. Now, right now, the VIX, that's what they call it, the VIX on the S&P is going back and forth between 14 and 16%. But over the last 3 years, it's averaged 18 versus the dynamic. It's pretty much stayed within its wheelhouse of 15%, maybe a little bit over, but you're basically reducing the volatility, which typically market performance history will tell you lower volatility, higher performance in the equity markets. So this index helps achieve that. When you look over time, the S&P 500 dynamic intraday returns exceed those versus the S&P, and that's due to more frequent rebalancing and lower volatility. So that's what we're after. Less choppiness, better returns. And if we look out 1 year, 3 year, 5 year, even 10 year, pretty impressive returns on this index. And another noteworthy statistic, over the last 18 years, the TCA index was down only 4, and the actual S&P was down 6 years. So better volatility and equally or better performance on the dynamic intraday index. Now here too, there's a good video on the product. You can go to, and we don't have the tab on all the products that offer it, but on the RCA annuity, the rate certainty annuity that we came out with last year, if you go to that product page on the website, click on rate certainty annuity, you can scroll down, you can get two videos. One, of course, is on the product itself. That's about a 45-second video. And the second one is on the index itself, and that one is also under a minute. So 2 client-facing approved videos. Now let's move to yet another volatility control index. This one is not proprietary to us, but it has been out in the index in the industry quite a while, actually, probably the longest of all the vol control indexes we'll talk about this morning. This one's been out since about 2017. So it's got about 8 or 9 years, a little over 8 years history with it. The S&P Mark V Excess Return Index. Now this is available on the Strategy 7 and 10, and it's also available on our new Smart Start Accumulator series. Very simply, it's a multi-asset or 3-asset index: equities, bonds, and gold. Now for equities, it utilizes just the S&P 500 index. For bonds, the US 10-year Treasury bond, and for commodities, gold. Now it manages to a lower volatility target of 5%, and it's actively managed. It will use cash if necessary, and it can use leverage, just like the TCA index, which could lever up to 250%. This one could lever up to 150% when there's low volatility and positive movement in the index. It is rebalanced every day. Now, assets are weighted based on the inverse of their calculated volatility. So what that means is lower volatility, higher weighting to that particular asset class. So if equities have a lower volatility relative to bonds and gold, then equities will have a larger allocation. Now, the index is adjusted daily by adding cash as necessary to maintain that 5% vol target. So when the index overall, the index volatility is low, it will allocate more than 100% to the index. It could lever up. But when index volatility is high, when it's exceeding its 5% target, it's going to allocate more to cash. So pretty simple formula, rebalanced every day. Performance-wise, if you just look at the numbers, you go, well, it's not overly impressive. But if you look on a year-over-year basis, in some of the years when we've had the most volatile markets, that's when you've seen the Mark V do well. So actually looking back on a 12-year rolling basis, which you don't see in the numbers down below, the last 12 rolling months, it's done very, very well relative to other baseline indexes like just the S&P or just the NASDAQ 100 and the like. Now, I mentioned that there are indices out there that utilize some of the baseline indexes. We've talked about a couple that utilize the S&P 500. Well, here's one that utilizes the NASDAQ 100, but it does it through a very popular ETF called the Invesco QQQs. That is an ETF in the marketplace, a retail ETF that basically mimics the NASDAQ 100 index. So the folks at Invesco built this index for us to basically track the NASDAQ 100 vis-a-vis its QQQ ETF that it's known for. So who better to do it than Invesco? So in May of this year, they built what's called the Invesco QQQ Portfolio Plus. They took the successful growth history of their ETF, the QQQ, and balanced it out with cash and commodities, I'm sorry, bonds and commodities, to maintain a 12% vol factor, lower than the average vol of the underlying S&P 500. So they're harnessing the growth of the NASDAQ 100 with a whole lot less volatility. So here's how it works. You've got the Qs as the anchor here, the NASDAQ 100 basically, and then to balance out the volatility, you've got a diversifying bond exposure. It'll utilize treasury bonds. Now, not just any treasury bonds, because there's several different treasury bond durations out there. It focuses on the 5 and 10-year U.S. government treasury bonds. And each bond's component is capped at 35%. So you won't see a weighting that will go much above 35% in either the 5 or the 10-year treasury bond. Now, that can vary, but that's typically the cap that they set. The other diversifying asset class is commodities. It will utilize a commodity alpha component. Now, this is basically used to capture the return or differential between the longer term 3-month and the shorter term front month commodity futures. So that's when they use the term commodity alpha, that's what they're referring to. The differential between longer term and shorter or current month commodity futures. And it's basically comprised of a very diversified mix, broad basket of commodities, including energy and metals. So it covers everything. And just as with the U.S. Treasury bond exposure, they do have a cap here as well. They're managing to that 12% vol factor that will basically determine the weighting to the commodity. And the initial weighting, as we came to market with this, was about a 30% weighting to the commodity alpha component. Now, it utilizes an adaptive asset allocation, which means the index exposure to equities is based obviously on the Qs, and then it will adjust on a daily basis utilizing bonds and commodities based on the volatility target or cap of 12%. So looking at typical Q performance or NASDAQ 100, you see a lot of peaks and you do see some valleys where it's kind of not doing so well. The whole thinking behind this concept of balancing out or smoothing the performance with the bonds and the commodities is to basically create a still decent channel of performance, but give the client a much smoother ride, more consistent returns. And that's really what this index has created. Now, obviously it's new, came out in May, but if we look at the weighting, the Qs had about a 29% weighting. You've actually got about a little bit above the benchmark weighting of 35%. You actually have about a higher weighting because of the volatility and the 2S US Treasury bonds components, and a little bit above that 30% target on the commodities. So because of the higher volatility that we had when we came to market in May, this is the weighting that we're looking at currently. Again, that can change on a daily basis. Now, because it's a new index, all we have is rules-based. How would this have performed looking back, utilizing the trading parameters, and going back the last 1 year, 3 years, 5 years, 10 years, down there at the bottom, pretty impressive. Since inception, 10.35%. So pretty impressive return potential. Is it as high as if we just looked at the NASDAQ 100 or the Qs themselves? No, but compared to the risk-adjusted returns with much lower volatility, pretty impressive return. The last on the list of proprietary indexes for Anaco would be a Morningstar Global Wide Moat, created for us by, of course, Morningstar. Now, this is a multi-asset strategy focusing on global equities, so it's not just domestic, utilizing US Treasuries and commodities to basically balance out risk to a 7% volatility target. Now, this one was created for us in April, and that term wide moat, many of you, especially since some of you may be in the Omaha area, I'm sure Kat's heard of Warren Buffett. If you live in Omaha, and I was born and raised in Omaha, you definitely know the name. He coined the term wide moat, which means a competitive wide moat. Very few companies can compete with the companies in that particular field because they have a competitive wide moat, or a huge advantage over the companies in their peer group. Well, those are the types of companies that are selected for this index based on that investment principle. So the current weighting, and when it came to market, you had about 60% weighting in equities, 20% weighting in treasuries, and 20% weighting in commodities. Now, this is adjusted every month, so it's reweighted monthly, not daily like the previous one, but still managed pretty tightly. And again, this is going to basically take an already decent index in terms of equities and dampen volatility even further. Looking at the actual performance, 1 year, 3 year, 5 year, 10 year, 15 year, pretty impressive performance. Obviously, it's back tested, but it just shows you that this also can give your client good global exposure with much lower volatility. Now, there's actually two, not one, two excellent videos that you can find on our website, or actually on Morningstar's website, vis-a-vis Anaco's website. So where do you go to find these? You've got one, for instance, that basically, and these are client approved, what is an economic moat? So you can actually tell Warren's story on what an economic moat is via a nice little short video for your client. How is the index built? How does this actual global wide moat index work? Both of these and more can be found on the index, on the website at American National. You go to products and services. You click on the Smart Start Accumulator series, and there you'll find both the index websites for both the Morningstar Global Wide Moat and also the one we just talked about prior to that, the Invesco QQQ Portfolio Plus Index. Both proprietary to American National and only found on the Smart Start Accumulator products. Now, we're talking about a lot of volatility control indexes, and there's a reason we're not the only company telling this story A lot of companies have added much more in terms of VC indexes to their FIA products. Now, a company that you wouldn't think would be touting the advantages would be a company outside the insurance industry, but none less than BlackRock itself has a very positive view on both fixed indexed annuities and even further on incorporating volatility control indexes. They published a paper, a white paper, basically called Retiring with Confidence. And in the executive summary for that paper, this quote, incorporating an FIA with an underlying volatility control index can help provide more certainty around future portfolio values, i.e., more consistent, stable returns, which at the end of the day, that's what we're after. And within our portfolio of FIAs at American National, we offer 5 volatility control indexes. 2 years ago, we only offered 1. So in the last 2 years, we've added 3. So we offer a pretty wide array, as you've seen this morning, in terms of VC indexes. We've got 2 established indexes, one which just about every FIA out there offers, and of course that's the S&P 500, but one that fewer companies offer, direct exposure to the NASDAQ 100. We've got 3 proprietary indexes or volatility control, but again, key word here is proprietary. You'll only find these indexes at American National. And that's our BNPP Patriot Technology Index, the Qs, the Portfolio Plus Index, and Morningstar's Global, I should call it Warren's Moat Index, right? Wide moat. And we offer both custom, do-it-yourself, and also preset portfolios. Select, push the button and you've got a portfolio designed for you. We got both. And we've got website links, as I just showed you a moment ago, to many of those volatility control indexes, specifically the proprietary indices, but also a couple of them that are not proprietary. Kind of a recap on what products you'll find what indexes on. The rate certainty annuity that we came to market with in the fall of 2024, that's a FIA that basically has one index, and that's that TCA index, only one index, and one particular indexing strategy, but 3 ways to slice it, which means 3 variations on a performance trigger. Very simple, probably the simplest FIA out there. And it acts somewhat like a MYGA because the rates on the underlying strategies are guaranteed for the entire policy term. Then we've got our oldest indexed annuities, the Strategy Index 7 and 10. They've been out for about 13, 14 years. There you can find direct exposure to the S&P 500, direct exposure to the NASDAQ 100, a volatility control index, and this is the first one we ever ventured into, that S&P Mark V, and then the one we just added last summer to the Strategy Index 10, and that is the BNP Patriot Technology. Now our newest product, and one that's gaining a lot of market share and a lot of market interest, that's our Smart Start Accumulator Series, where you can offer your client large upfront bonuses of 14 to 20% and a whole lot more. You got direct S&P 500 index exposure, and then you've got the first of basically 4 volatility control indexes. Here you'll also find that S&P 500 Dynamic Intraday TCA index, and then you'll find the first of 2 proprietary indexes that we talked about, the Qs, Portfolio Plus, and the Global Wide Moat. And then to round it out, we bring over that S&P Mark V that we offer in the strategy products. We bring that over and added that to the Smart Start. So you've got a very well-rounded index product series with both direct index exposure and volatility control indices. As Kat indicated, got some good contests going on at American National, but not one, not two, but actually three, where you can make some additional money on your cases. Now, the first two are FIA business only, starting with the contest we started the first of this year, our 2025 fixed indexed annuity production bonus. It's a bonus paid out each quarter. We look at the cumulative total of FIA premium. So there's still time. We've got the fourth quarter where you can really capitalize anywhere from 25 basis points at 2 million of production up to a point and a half additional comp on your index business for 10 million or more. And I'll tell you this, if you hit definitely hit the last three tiers, 4 million up to 10 million plus, you're definitely in the hunt for our annual conference. So this is a cumulative bonus, FIA business only. Now here's one that's FIA and product specific, and that's our new Smart Start. Since we just released the product, we wanted to give you a Smart Start as well. On your first case of 25,000 or more, we're going to pay you a $500 cash bonus. Now the last contest is on any annuity business. Now it only applies to you if you're new to American National. And when I say new to American National, you came aboard anytime since January 1st of 2024, and you haven't done any business with us yet. Or if you did do business with us, maybe it was a paper app. Well, on your first two Firelight apps, we will pay you a $1,000 cash bonus. So hopefully we can, if we haven't earned your business yet, hopefully we've got a good story to tell, and you'll maybe give us a look on your next annuity case, possibly FIA case. Again, my contact information there on the left. I'm the regional sales manager. IAMS, of course, is located within my region. No matter where you're tuning in from today, whether you're in Omaha, whether you're out West Coast, East Coast, or somewhere in between, you're in my region because IAMS is in my region. My internal, Jennifer Richards, she's also an additional layer of support. She's been with the home office about a little over 12 years. I've been with the company about 23 years. So you got a lot of support, direct. And then you've also got a sales desk. If you can't reach one of us or you need illustration support immediately, you won't get a voicemail with a sales desk. You'll get a live body within 2 minutes or less. And then your new business team. You've got direct exposure to the new business team for IAMS. And if a case maybe isn't getting the attention that you need, or you got a special need that you need addressed, you can escalate it to an annuity new business manager with that annuity new business manager email there at the bottom. So I want to thank you for your time, for your interest. Hopefully I piqued it if we didn't have it coming in. And feel free to reach out to me. If you have questions, I'll be glad to take them now. But if you'd rather reach out to me afterwards, please feel free. If you have done business with us, I thank you for your business. If you're contemplating it after today's webinar, I thank you for your interest, and hopefully we can do some business with you.
Absolutely. Thank you so much for that high level presentation, Jeff. That was, I think that was really great, actually. I love the deep dive into the indexes. Juan did ask if we would have a recording of this presentation. Yes, it will be available, and I'll be reaching out as soon as we have it. I just wanted to launch a really quick poll here before we wrap up, if that's okay, Jeff.
Yep.
My question is to ask the viewers and to the people that are listening to the recording, are you already contracted or appointed with American National? Okay, it's nice, like 50-50. And so again, I'll be reaching out afterwards. We can get appointment work going. And then those are some really nice cash incentives. That $500 too on the Smart Start Accumulator series. That's pretty nice. I wasn't aware of that. So I'll probably reaching out to you afterwards, Jeff, to get a copy of that flyer. And
Okay.
then um, my last poll here of the day, um, would you like to be appointed with American National? And so I do expect 100% on that, folks.
We definitely want to get you appointed with American National. So look
Yeah,
forward to doing business with you folks.
absolutely. Thank you so much, everybody, for voting and for joining and for listening in. I'll go ahead and reach out. Thanks again, Jeff. You take care.
All right. Thank you. And everybody on 9/11 today, thank you and
Yes,
God bless America.
absolutely. God bless, guys.